Hi, I'm Martin Pring. They say that a picture is worth 1,000 words, but I say that a chart is worth 1,000 pictures. And that's because charts in the financial markets often scream out very important messages that an important or significant trend reversal has taken place or is about to take place. Each month I publish a newsletter called the Intermarket Review, and each issue contains what I call the chart of the month. And that features a market that I think has just turned or is about to turn. So this series of videos aims at presenting these charts of the month. So if you're interested in them, please hit the subscribe button and you'll be brought up to speed on a regular basis. So without more ado, let's go to the chart room and see what's in store for this month. In the last few months, many commentators, including myself, have been focused on the possibility of deflation-sensitive assets taking over market leadership. As so often happens when everybody looks in the same direction, the event rarely happens. That's why this month I'm more focused on the inflationary aspects. This chart, for instance, represents the monthly path of the ratio between inflation-sensitive, resource-based, and deflation, defensive-sensitive equities. It has been in a trading range for some time, a horizontal green multi-year trend line acting as a major upside barrier. When that barrier is violated, a very significant inflationary signal will be triggered. The long-term momentum indicator, the KST, is marginally bullish, but of perhaps greater significance, the 24-month rate of change has fallen to the kind of level where previous momentum reversals have been followed by a primary trend-type inflation rally, as you can see from these arrows. Sometimes it's been possible to construct trend lines against the ROC, and when they've been violated, it's offered pretty reliable signals of an inflation-sensitive rally. Currently, this momentum series is just below a new downtrend line, so its current trend is obviously bearish. But what are the chances of a breakout? For that, we have to go to this chart, which shows us the weekly picture. This relationship has been in a trading range for about a year. For a while, this looked like a head and shoulders top, and indeed the neckline was violated in mid-July. Since then, the ratio has rallied above the line joining the head with the right shoulder, and it's currently just below its 65-week EMA. The short-term KST has gone bullish and violated a major downtrend line, and that strongly suggests that the ratio will move higher and drag the intermediate series with it. If so, the trend line on the 24-month rate of change would likely be violated on the upside. The significance? Well, first, that inflation-sensitive stocks, such as mines and energy-related, will take over market leadership. And second, because this series correlates with commodity prices and bond yields, we're likely to see higher levels on both. If you enjoyed this chart of the month, you may want to go to Pring.com and download a free sample of our Intermarket Review, a monthly roundup of the world's principal financial markets with a special emphasis on the US. We also look at global indicators, bonds, precious metals, currencies, and international markets using ETFs to execute our strategies as much as possible. You'll find unique indicators and intermarket relationships you cannot find anywhere else. In the meantime, thanks for watching and good luck and good charting.